Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
Let's go out there. It's August 21st. I'm Frank Curzio, just the Wall Street Unplugged podcast. We're breaking the headlines and tell you what's really moving these markets. Back in town is the greatest analyst in the world sitting next to me. The most handsome guy ever. Daniel Creech, fresh off his 16th vacation of the year. What's going on, man? How's everything?
16th vacation of the year. Things are good. As Aerosmith sings, it's good to be back in the saddle again, Frank. Had a great trip. Two quick observations. Airlines were full. I flew Delta, packed planes, all over the place.
Got a delay, right? You had a delay too?
Yeah. Oh. So I was having dinner on Sunday evening. I was scheduled to fly out first thing in the morning on Monday. Got a text message. Flight was canceled. I had a layover. I feel like Ron White. I had a layover. I was going from Dayton, Ohio to Jacksonville, Florida. So it'd make all the sense in the world to go from Dayton to your home state of New York and then down to Jacksonville. Evidently, there was some weather on the East Coast. They canceled that flight, put me on a late flight for yesterday evening. Got in around 1 a.m. Tuesday morning. Not a big deal. Other than the hassle and the reschedule, I got to say it was easy for, I didn't have any other options. So what am I going to do? All the other flights. But that was good. Second observation is I took a quick video, Frank. I was laughing out loud. Had a small layover in Atlanta coming home. And I thought, hey, I'll grab a sandwich. Don't want to have a cocktail on the plane on an empty stomach. That's not responsible. Every food court line was empty except one. Guess which one it was? Chick-fil-A, of course. So I'm standing in line. I think, I got a half an hour. I can chill out here. And I'm waiting, and they're great at service, don't get me wrong. But I literally took a video out of the 8 restaurants right next to each other. You could have walked up to the counter and ordered right away, and everybody stood in Chick-fil-A. It's just hilarious. That's brand awareness and the power of a brand. But great trip up there. Always good to go home, and even better to be back, because nothing better than doing podcasts here with you, Frank.
Yeah, that's cool. You got to see the family, hang out. Said the weather was great, right?
Oh, 75 awesome. And beautiful. Man, August. All those global warming guys really are upset now because I'm going to brag about how good the weather was in August. And I had sweet corn. I don't know.
It's climate change. It's not global warming.
Oh, that's
It's
right.
climate
Okay,
change.
yeah.
This way, it doesn't matter which way it goes. It's.
Let me tell you something.
Change.
Middle of August, 75 and low humidity is absolutely wonderful change, regardless of what you want to label it. Daniel at CurzioResearch.com. I'm having fun, everybody.
No, that's great stuff. That's great stuff. So glad to have you back. Again, I told you this podcast plan to do more interviews going forward. Got a lot going on with our company right now. A lot of good stuff. So people, subscribers know what I'm talking about. And but I did want to get to some interesting news today. A lot going on. The first thing is, which is 30 minutes late, by the way, but you just had the payrolls, which is the BLS announcement. They come out and actually, this is when they go over the final tally of payrolls. Now, this is from March 23 to March 24. Why they don't do this often or why they can't get this data? Because they use a quarterly census of employment and wages, right? So this is like the factual because it's based on state unemployment insurance tax records, right? It's not based on surveys and shit like that. So it covers nearly all the U.S. jobs. And it came in today, and it was rumors of how bad it was going to be in terms of the revisions, and the revisions were that bad. Well, you had J.P. Morgan and Wells said there's going to probably be a negative revision of this. Again, they get the heads up from the Fed all the time and everybody else. So they got, I mean, how do you know it, right? They just actually reported this recently. It's going to be around 600,000 of a revision. Goldman Sachs said it could be more like 1 million. It was right in the middle. It was a little over 800,000. It was revised lower, much, much lower. Daniel, what's your take?
I think that this is a perfect display and exclamation point on the Willy Wonka and Wizard of Oz world that we live in. Frank, 819,000 jobs that we thought were created, as you said, between March 2023 and 2024, didn't happen. Never happened. That's 30% less jobs than what we've been reporting and bragging about in the financial media. Me too, and you too. Everybody wants strong job numbers. Everybody wants a better economy, of course. Frank, that's the worst since 2009. You know what happened in 2009, Frank? Chaos, markets, chaos. I do think there's a lot of politics here. I haven't listened to the full soundbite yet on CNBC. I don't want to take that big of a swing at him, but CNBC, what's his name? Senior economic advisor, Steve Leishman,
Steve Leishman,
said, well, I don't know what you should really take away from this. The thing that you should take away from this is that we've been lied to for a year, and that's 800,000 jobs that did not happen that reportedly happened. And you got to think of what goes along with that. When we talk about this all the time, and you do a great job about sentiment. Mm-hmm. When you know and you think that the economy is doing much better than expected, when the job when the job market is better than expected, that gives you hope, for lack of a better word. We'll get to the DNC later, but it changes people's attitude, sentiment. It could change spending habits. But the idea that it's a 30% hit to payroll jobs and the worst since 2009, I think it just makes people buckle down and understand, listen, you got to take everything data-wise with a grain of salt. And as we've said, heading into the political election this year, that is not a coincidence. It's not a coincidence that you have these huge overstatement in jobs over the last year to kind of fuel this fire of a recovery and or this bull market. I just think that's crazy. I think two assets are going to do really well, or this is just a tailwind for those two assets, gold and Bitcoin. What about you? What are your thoughts there?
You know, why the fuck do we have all these numbers for if they're not accurate? Like, what AI is doing right now is it calculates things a million times faster. And this is like the perfect use for it when it comes to economic data. That's just old. It's through some surveys. I mean, who do you know you're talking to? It could be this is data that we could get right away now. And all of our decisions in investing, I don't care if you're a fundamental analyst or technical. Imagine if you're doing technical charts and you're like, well, last time this happened with a stock, but that really didn't happen. I mean, what's your thesis? It gets thrown down the drain. So when this data is not accurate and is off by this amount, this much, it's a really, really big deal. I mean, we're looking at 2.9 million jobs were created from March 23rd to March 24. That's 242,000 a month. Now you're minusing 800,000?
Mm-hmm. 819.
So, you're looking at what? Maybe instead of 242, I'm doing the math in my head, 165-ish, 170. I mean, it's massive, right? You talk about 60,000 jobs fewer. And you know what? You would think this would have to do with government jobs and things like that. But the biggest downward revision came from professional business services, which I knew, you knew. Anyone who follows any newspaper could see the massive layoffs that have taken place over that time period by just about every company in S&P 500. And that's what we were saying. We were saying it, pounding it down your throat, how this is the first time I've seen in my 30-year career where stocks at all-time highs and these companies are laying off like crazy. You don't see that. Usually when their stocks at all-time high, business is good, margins are great, earnings are great, and they're spending more, they're hiring more. Now they're cutting back. And we saw that. And for this to be so far off, it's terrible. Now, what's the takeaway? The takeaway is the Fed's probably going to cut by 50 basis points. I said there was an 85% chance of that happening. Now it's probably like 95%. There's no reason why you shouldn't go a 50 basis point cut in September. It just makes a lot of sense. Plus the CPI number that we're going to get just a couple days before. The year-over-year comparisons are not good to the point where it's going to come in less hot than expected. Year over year, it's going to be down a lot more. So you're going to see inflation moderating, which is definitely going to give them the green light. And this is why you're seeing gold rally here. Interesting, I saw just before we went on, it was Barrick Gold, the CEO of Barrick Gold. I can't remember the last time they had gold CEOs on CNBC. Holy shit. But he was just saying how underpriced the market is and where in terms of the stocks and equities. Listen, I am getting super bullish. You know that I haven't talked about gold a lot in terms of being incredibly bullish. We picked away at Newmont here and there. We have, I think, one junior miner in our portfolio, I believe, in our small cap portfolio that we still have. It's come back that we had long term. But, I used to have 5 or 6 of these in my portfolio. You're going to see a ton of these names go into the portfolio. This is an industry I cover for 10, 15 years. I know all the good players. I know all the shitty players in the industry, who's getting it done, what projects are great. I mean, the project is still there. There's CEOs that did a great job that, developed these. They added to their assets. They didn't just raise money to pay salaries. They raised money to buy assets that were down 80, 90%. Now you're going to see those companies, the next $500 move in gold, 3,000. I think we could, many of us agree that it's going to go there, especially with rates coming down this sharply and everything else going off with deficits and stuff like that. I think it's ripe for gold stocks right now. I really do. I think gold stocks right now, even silver, they should do well. They haven't really performed considering where gold is. And I know a lot has to do with inflation and costs, especially when it comes to actual miners, not junior miners that aren't mining anything. the next move is going to be much higher for these names. And I think that's the move that everyone buys these junior miners for, to get the 2x, 3x, 4x returns when that cycle changes. The cycle changed a while ago. It changed, 2 years ago, where we saw breakthrough new highs, and now at 2550 new highs. And after this number, gold was down a little bit off its record high, and now it's flat, and Bitcoin is up, approaching 60 grand again. And you have the overall markets turning around too, where they were relatively flat and now they're higher because they're expecting a bigger rate cut from the Fed. And I said this year it's very difficult. I could cite, and I did it on Twitter, Daniel, I said, if you're a contrarian investor, you should be buying stocks hand over fist right now. Because if you look at the risks, and I named pretty much 10, 15 different risks that whether it's geopolitical, Israel, and Iran, if you're looking at Taiwan invading China, if you're looking at the economy slowing, overvaluation, AI stocks in a bubble, commercial real estate is dead, all this stuff, really, there's so many negatives in this market, and you don't see too many people that are bullish other than Tom Lee, and he deserves it. He's been very right in this market for a long time. If you're a contrarian investor, you're buying this market, it's hard to go against this market with buybacks coming back into play. A lot of people caught off sides that removed a lot of money from the market in the downturn when it just pulled back a couple weeks ago. They're getting back in it. There's $6 trillion in cash and money market accounts have to make their way back into this market that came out of it. So this year, going into the election, it's difficult to bet against the market. And here you have positive news, right, which is more jobs, more layoffs, but that's positive because the Fed is going to cut aggressively. And that's what everyone wants to see, because when we look down the line and we look at Target and we look at some of these companies reporting, we're seeing people starting to get hurt right now. We're going to talk about it a little bit later in autos and things like that. But you're seeing the effect of what happens to the consumer when interest rates are high for longer. It doesn't happen right away, but now people are getting squeezed. It's tougher. You're seeing delinquency rates go higher. It's getting tougher and tougher. We need interest rates to come down. I think this gives the all clear for the Fed to lower by 50 basis points when they meet in September.
I like the 50 basis point call. Two quick things. You pointed out 358,000 jobs that weren't created, overstated in professional business services. The next one is 150 in leisure and hospitality. Frank, 115,000 in manufacturing. The whole reshoring, manufacturing, getting back to the kind of the good old industrial days of the United States. Again, it's not saying that no jobs were created. It was just so much overstated that's unbelievable. So those three categories are. But
it makes you think, because this is from March to March, right? Mm-hmm. You say, well, it's not a big deal. Well, what about from March to right now? Right?
Yeah, exactly. I mean, you don't get that until forever ago. Next
forever
year.
Ago. Why? Yeah. Why forever ago do we have to wait? Why is it every March with the
forever
BLS? Why isn't it updated quicker? Why are we not, restructuring these indexes? The CPI is a joke the way it's calculated, recalculated. I mean, it was rebalanced in a way to calculate it so you show no inflation forever. That's what every politician wants, right? That's what the Fed wants, right? That's why it's 30% is rental properties and real estate, right? Because, that shit never goes up. And it didn't even go up that much. If you look back at history and you look back 30, 40 years, and I'm an idiot because I did this research, it's rare for rental properties to go higher than 2% in any given year. Even when we saw 2005, 6, like 4, 5, and 6, where leading up to the housing crisis, home prices were going up 20%. Rentals weren't going up as fast. So okay, this keeps inflation in check. We all knew there was inflation, but based on the CPI, there's no inflation. That's all the Fed cares about. And now we saw out of nowhere in the past couple of years, rental market went through the roof. It's going up 8% 1 year. So now you see it reflected, and they're like, it's just the way they calculate this and all this data it could be so easily solved and make it so accurate. But there's a reason why they're not doing it. And again, it's got to be for political purposes, but this is an embarrassment to be this far off. It's really an embarrassment because you're basing your research, you're basing everything, your money, your livelihood, everything. The Fed is basing its policy, which affects the world, the entire planet, right? With a reserve currency. And this number is this wrong. It's very, very disappointing. But with that said,
last thing, sorry. What does Powell say this Friday at Jackson Hole? Do you think he addresses this? Is he going to mention this?
And they're saying that, I forgot what I read, the economic analysis on it, where, economists are going to say, remember, economists are just, I'm starting to realize that most economists are idiots. I mean, they're useless human beings. They're useless. I mean, they're worse than weather people who, and they're even getting better, at least. Remember, they used to be so
we were only insulting economists. Now we're bringing in
no,
weather
but I'm just saying,
these
I mean, it's so bad. Even when You see when a data point changes, what happens? They say Goldman Sachs comes out and says, oh, now there's a 25% of chance of recession. Now there's a 30% chance of recession. You know what the chances of interest rates going to where they were right now when they first started raising them? Goldman Sachs had them peaking at 3%. At 3% in 2023. But they're going to peak at 3%. They're going to come back down at the end of 2023. And look where they are now. And look how much longer it took. Right? It's useless, right? I mean, the way it's not useless is people are basing the consensus of what these idiots say on how they're trading the markets and what the Fed and trying to dictate Fed policy. But they are so wrong with their analysis. And I don't know if they just lock themselves in a room and they don't understand people, because the economy is people. It's exciting. I wish I taught economics. I'd make it so exciting, because it's about everything you buy, everything you sell. It's about your neighbors, what they're buying. I mean, you can have so much fun with it instead of doing bell curves and all this stuff. And they're so used to looking back at history when we're in a moment that's unprecedented, where we never spent $11 trillion and threw that into the market and handed it, not to the banks, directly to people and businesses. And they don't understand the effects of that. They didn't understand that was going to cause inflation. The number one smartest economist on the planet is Powell, supposedly, and he said it was going to be transitory. You couldn't have been more wrong with that. So it's frustrating, because I love economics. It's something that I take passion in, and looking at numbers, I feel like we do a good job predicting it. But man, you can't be this wrong on a freaking number. You just can't. I mean, it makes you think like, we're China all of a sudden. And it's sad. It really is sad. But anyway, Powell will be addressing this. He definitely will be addressing it. And this should increase the odds of a 50 basis point cut. Seeing that the job market's not that good, but they should know that it's probably even worse right now. Right. Because we've seen a ton of layoffs over the past 3-4 months. Exactly. Right, since March.
Yep,
so
absolutely. It's not as rosy. But unfortunately, or fortunately, like you said, that's good for asset prices. That's good for stocks. So.
Yeah.
Bad news is good news.
Bad news. And if inflation goes higher, it's good for stocks. If inflation goes lower, it's good for stocks. Remember, everything's good for stocks at all times. At all times. Just, you can't really short the markets. You got to be crazy to short the markets. Because even when we see shorts, what happened? We just saw it, right? A couple of weeks ago. I can't overstate this, that when we have these pullbacks, and as someone's been doing this for a long time, the pullbacks are so quick and so big. And I think the bears just jump on it. When you see a 20% correction, a 25% correction, what was it? NVIDIA, 25% correction. All right, it corrected. Usually you could see that type of correction in 6 months, 9 months, a year, maybe if you date back before the credit crisis. Now it happens like in a week and a half, and everyone becomes more bullish. I'm like, your thesis just came to fruition. A 25%, you're talking $1 trillion of market cap wiped off of NVIDIA. You're right, in a week and a half, and everyone's like, keep selling it, keep selling it. Now it comes back. These downturns happen so quickly that once you start recovering, then you have, what do we have now? What is it? The S&P 500, what is it up for? Like, I don't know how many days in a row, 7, 8, 9, whatever it is. It's like every day it goes up, every day it goes up, because but when it goes down so much quicker. And that's why it's this buy to dip mentality. It's buy to dip mentality. If it goes down even more than 20%, it goes down 30%, what happens? You get Jeremy Siegel going, emergency 75 basis cut right now, and the next Fed September, another September. Oh my God! And you got everyone on CBC panic mode. Holy shit! And then they force the Fed's hand to be like, the Fed's got to do something right away. It's almost like these safeguards are in if the market goes down, because we're not allowed to have a recession either. Anyway, I didn't want to go that far into it. Going into a retailer, right? Target posted. Good job, Daniel, on that.
Oh, I hear. Welcome back.
We've had this in the portfolio for a while.
I did sell that out of CRA.
Yeah, we did.
It was profitable, but that just got to be more aggravating. Listen, you can buy Walmart, you can buy Target anytime and hold those guys. But we did, you timed it right at the beginning, because it was a great COVID trade when everybody was supposed to lock down and stay at home in handcuffs, other than the biggest and most profitable big box retailers. So two things I thought, one thing that I thought was hilarious, just kind of to piggyback on our worthless economist conversation we just had. The CEO of Target said the consumer is resilient. And we were joking just a few minutes ago, because they cut prices from peanut butter to diapers to all kinds of things across 5,000 items. It said, you've been talking about that for the last couple months since we've been following these on their conference calls. Frank, when you go to Target, yes, there's a lot of things that you don't have to have that you can discretionary purchase or whatever. Mm-hmm. But essentially, you're going there for food and or items that you have to have. Mm-hmm. So, of course, you're going to be resilient in that. Like, I can't stop buying food and gas.
Yeah.
So, to classify, I don't want to take a shot at the CEO because they did put up a decent quarter. And again,
But they also said,
again, with all the BS and
Yeah.
wokeness they've been doing, there was a lot of bad news baked into this. So getting away from that, or at least putting decent comps, same store comparable sales back in, like that's huge. And I don't know if it's still at its highs today. It was up 15, 16%.
it's up
Last
about
time I saw it, it was
12.
out
I mean, when you
10.
digest a quarter.
And that's still a good move. I would still stay with Walmart over this because that's just, I mean, they're clearly the leader. And if you believe that things are going to continue to stay tight, when I say things, I mean higher inflation, higher cost of goods. But the resilient thing just bugged the hell out of me. I gotta admit, because of course you're going to be resilient for food and stuff that you absolutely have to have. I don't know about your thoughts on Target, but like I just saw the headlines and I just kind of giggled out loud.
Yeah, I'm just actually looking to see the price differential. But so this stock's up 12% today, right? I think it was up like 16% at its peak. And I have a chart up here showing that without that, it was basically flat year to date, while Walmart was up 42%.
Yeah.
Right. So which is amazing. And even if I do,
Yeah, I got it at 13% year to date, and it's up almost 13 today.
yeah. So that's all the move. And even Costco is up 33%. So you have 30. The takeaway is this: one is, the report was good, about time, because these guys have lagged everybody else and should have, right? I mean, we've done okay with this position. Walmart has done better. I mean, we've owned it for a while. And they've had inventory concerns and things like that. But you're right to say the consumer's resilient when they're purchasing. A lot of this is groceries, and they're not getting it because when you go, even by me in Florida in Publix, they destroy you. Unless you buy like the 2-for-1s and stuff like that, they destroy you. Every single thing is at least 20 to 30% higher minimum than if you'd buy it at a Walmart or even a Target. So those people are like, I'm done with this, and I'm going to go to Target and Walmart, and you're seeing that. But they said while resilient, they lowered their estimates, like the low end of their guidance, and they said they're expecting the consumer to cut back a little bit. So the guidance wasn't as great, but again, low expectations into this stock, and it's like a catch-up trade. And when I look at Target and Walmart, this is the perfect environment for these big guys. And you see a slowdown in the economy. You say they have pricing power, but it's almost like they have like the reverse pricing. So pricing power is the ability to raise prices and pass them on to the consumer. These guys are also able to cut prices and maintain their margins because of the control they have over the suppliers. And what that does is when you have a weaker environment like this, a lot of the mid-tier and smaller companies struggle like hell. They struggle like hell. Think about your banks. If you have a mid-tier bank, your fees are always higher than they are, even though JP Morgan and Wells Fargo bang you out and they're not even giving you any interest, even though interest rates are high, right? They're going to fuck you, and everybody knows that. But when you go to the mid-tier banks, their fees are much, much higher, right? So that's how they make ends meet. And if you're looking even at retailers, those mid-tier retailers that compete with them, they could stay afloat. But in this, we have a slowing economy, consumer cutting back. These guys are able to capture and take lots of market share and become even bigger. And that's why through these times, when you see the downturns, the bigger usually get much, much bigger, right? They have better balance sheets. Then they could buy some of these struggling competitors that were actually doing well at one time. But this environment fits these companies absolutely perfect because, yes, it's a slowing economy. And yes, you're seeing prices. They're lowering prices on certain things. And that's working. Did you notice that? They're lowering prices.
Yep.
Who's lowering prices? Costco. Keeping their price at $1.50 on a hot dog. Good for them. But you have Target said they're lowering the grocery prices, right? And over the past 2 quarters, we saw Walmart say the same thing, and look at their results. So, they're able to get people into the store and maybe get them to buy other things that they're not used to buying, because once you get in that store, there's a million things to buy. But these guys accelerate so much in these types of environment. And it's no surprise they're going to do well, and they're probably going to continue to do well as the economy slows. Yes, I know rates are coming down, but, let's see. We got a couple head fakes in the past with Target. Let's see if this is a head fake or not. But this is a catch-up trade. It was flat compared to Costco, which was up 33% year to date. Walmart was up 42% year to date, and this is a catch-up trade. It's up 13%. It should get momentum and go a little bit higher here. But the outlook wasn't this. They didn't really raise outlook, and they were more cautious and conservative in the outlook, like most people are, because it's tough to gauge the economy. But overall, very, very good quarter for them, and good for them, right?
Yeah, absolutely. And just to piggyback, with them cutting prices, them Target and Walmart, you're also seeing McDonald's do the value meal, again, going after that consumer because of headwinds like inflation and such. And Frank, I'm sure you're a fan of this. On September 6th, do you know a new Beetlejuice movie comes out?
Yep.
Okay. So Denny's You like Denny's?
I love Denny's, yeah.
I'm a big Denny's fan.
They just
Waffle
closed
House,
Denny's
all that.
in San Francisco.
I like
It was
the
25 years.
dive bars of restaurants. I'm a big fan of.
Denny's
But
is
they're
good.
doing 2, 4, 6, and 8 value meals for Beetlejuice type stuff.
Wow.
So maybe we'll go eat at Denny's and try that out. Maybe buy the stock. But the point is, you're looking at this competitiveness for the consumer that is struggling. I mean, they're honest about it, and value meals and all that kind of stuff at Walmart. McDonald's, and now Denny's with Beetlejuice. So I just wanted to say Beetlejuice.
I was excited because I love that movie, but I saw the long preview that they had when I went to go see, the Wolverine and Deadpool.
Oh.
And it didn't look like it was going to be that good. I hope I'm wrong on that because I'm a big Beetlejuice fan. Yeah. We'll see what happens. But also, really quick with Target, which is interesting, is the CEO was on CNBC and they asked him about price gouging.
Yeah.
Which we're hearing, which I think everyone in the Democratic Party, you have the Democratic convention going on right now. They all got the memo to mention that, at the convention, price gouging and stuff, and how they're going to go after big companies. And he came out and said, listen, we're in the retail industry. You can't do this in our industry. There's just too much competition, which he's right. But it's just like every company now, every single company that sells anything, they're pretty much going after. But at least it's a Democratic convention, which is going on right now. And, we saw a couple of things out of Kamala where she hasn't done too many interviews. Okay, they're getting a lot of momentum. They raised $500 million. They have $500 million. $500 million they raised, I think, since they announced it, which is insane. But now she's got to go over her policies, and we see the flip-flopping back. If I'm fracking, I'm not for fracking, I'm this, that, right? But one thing that they did mention is they want price controls, and everybody went crazy on that because that's never worked in history. And we know that, which means... it's not based on supply and demand, and we see this happen in a lot of countries where that doesn't work. And just the economic policy coming out of them is insane that even Democrats are going, holy shit, what's going on here? Because they also said they want to tax unrealized gains. You kind of say this going to an election, but when you highlight that at your convention, and you really can't understand the economy, how things work. Remember, these are all politicians on both sides. So many of them have gotten paid by the government, and it's, they think there's a limited amount of money. These are our tax dollars, right? They're supposed to represent us. What they're doing is they're doing things that represent themselves, so they're going to get them elected. We all know that on both sides. I don't know if people understand. I'm sure listening to this podcast, you might understand what unrealized gains, taxing those unrealized gains are. But I'm going to put this as an example for you. So if they decide to do something like this, which is outrageous, I can't see it being done. I would predict at least 30% of small businesses are going to go under, and the stock market's going to crash at least 40 to 50%. And here's why. If you have $10,000 and you bought NVIDIA 3 years ago at $25, and today it's at 100, right? So you have 300% gains. Okay, and say, for example, just for this example, that those 3 years have worked out exactly. 100% gains, 100% gains, 100% gains, right, over 3 years. Under the current policy, you're not going to pay tax at all until you sell it. And when you do, you're going to be taxed 20%, maybe 15% based on your tax bracket, on a 30% gains, which is $6,000. Okay, fine. That's the way the system is. If you use unrealized gains, you're selling something that you haven't sold yet, right? I mean, you're getting taxed on something you haven't sold yet. And when I see Harris talk about this, they're dead serious about it. They're not like, oh, well, we said that. It's not like fracking. You said it a while ago, and now you flip-flop, and now you're going back and forth. They reiterated this is what's going on. Now, if you're taxing the unrealized gain, you would get taxed 25% on a $30,000 unrealized gain a year. So year one, $7,500 in taxes. Year two, $7,500 in taxes. Year three, $7,500 in taxes as you own this. That's $22,500 that you would be taxed. And more importantly, is how you're going to pay for that tax. Many investors are going to be forced to sell their stock. You're going to see money coming out of the market tremendously. But the best part is, let's say you don't sell it and NVIDIA goes all the way back down to 25. You just paid $22,500 in taxes on that. And yet you don't have a capital gain on it. It's when you put it into perspective. And again, if you're in the stock market, you understand, and I just gave you 101 on that, and you're probably like, oh, okay, I get it. But if you don't understand what that would do to assets and what that would do to businesses, the stock market, I mean, you're talking about an unbelievable collapse if they were really serious about this. I don't think it'll get passed anyway. I think it's insane. But to mention that out loud, holy shit. I mean, that's pretty insane, and that's what we're hearing from, the Democratic convention right now. And, again, huge popularity, just like with Trump. It helped that he almost got killed. Where you saw the popularity of the Republicans, just it was insane. And then they were like, listen, Biden, they pushed him out. Kamala, who is surprisingly how everyone hated her on both sides and said she was the worst vice president. Now she's the greatest thing ever. It is interesting to see how this is unfolding, but I think the Democrats have a very good shot at winning here. That's crazy to say.
Well, I mean,
It's crazy to say from 2-3 weeks ago.
Yeah, they have a lot of momentum. They're getting a lot of money. Money trumps everything in politics. I'll talk about this more as podcasts unfold and things, but there's a lot of reasons that the polls that we're seeing are very, very slanted or whatever. I'm not trying to cry or say I have a tinfoil hat on. It's very difficult for me to believe that the race is as close as it is when you understand the average person is dealing with the circumstances everybody's dealing with prices and all that kind of stuff. But I could be wrong on that. The takeaway from the unrealized gains, and to your point, it would cause such a doom loop because, for instance, Galaxy Digital Holdings is my largest position in stock. I have been up several $1,000s and I've been down 80% in that stock. So if you tax me when I'm up several $1,000s and then the year later I was down 80%, what that causes is you're either going to have to sell that stock or you're going to have to sell other holdings or other assets. And what happens when you do that? Now you are creating a taxable gain that goes through for the next year. It would just be an absolute terrible idea, but you're pandering. It's that more social division. And that's done on purpose, and everybody does it. What drives me insane is that the only thing that you don't touch is capitalism. And that is what is under attack right now. That just shows you where we're at in this kind of graph or up and down of society. Nothing new under the sun. This happens all the time if you look at history. It's just unfortunate that we have to defend capitalism when you have the easiest result to point to and be like, hey, how did the United States become the largest, greatest superpower in the shortest time in the history of the world? Well, capitalism. Yeah, let's do away with that. The crazy thing on price controls very quickly, if they implement price controls, go buy everything you can because you're going to see empty shelves and even higher prices. That's the only thing you need to take away there. As you said, it's been tried countless times. It's never, ever worked. It won't work. It's not going to work. But the bigger problem here is, and both parties do this, and this is what's aggravating, and you just have to deal with it through this political season. But wouldn't it be great to be able to cause a problem, blame others, and then take more responsibility and take over more control of that sector? So whether it be healthcare, whether it be energy, whether it be public education, whatever you want, you can take it over. You're the biggest influential player. This results and statistics suck. You can look at how much, for education, you look at how much we spend per individual, per child, and balance that or compare that to the rest of the world. You can look at healthcare cost here and compare that to the rest of the world. And then you can say things like, if you like your doctor, you can keep your doctor. Prices skyrocket. People are still uninsured. And what do? Well, you blame the healthcare system. Mm-hmm. Now, there is a lot of blame to go around the healthcare system. Do not get me wrong. I'm not defending them. The only people more crooked than our business, Frank and Wall Street, are the healthcare people. Okay. And I say that as a compliment. I know several doctors, and one is a great friend of mine. But wouldn't it be great to be able to infiltrate them, affect them, impact them, blame them, and then take over more control of that, that's a scary thing. What you're going to see too is about these price fixing is that you're just basically going to want all government employees to be farmers and take over all the farming because even though wheat prices and different things are crashing, bread is still expensive. So, of course, that's the farmer's fault as well. We'll see how that unfolds. But unfortunately, we have to defend capitalism, but it is worth defending.
It is interesting when I see, and I'm going to give Trump a little shit here too, because when George Floyd happened, it was May 2020, and then you saw riots in the street, and as he's running, this is 2019, right? So 2020, 2024, so as you're running, you're like, I'm going to clean all this up, and I'm going to get the National Guard. You're in office.
Yeah.
Right? So when you have Kamala Harris going, hey, this is what we're going to do to control inflation, you were a fucking VP for 3.5 years. Why didn't you do that? Oh, I'm going to control the border. What? I mean, you can't make this up with these politicians. It really is unbelievable. It really is when I see something like that. But I can tell you why, because I'm going to elaborate a little bit more, because I think people might have been surprised when I said I think that even though they're leading the polls, whether they believe them or not, the Democrats have a good shot. One is when I look at this election, or even look at the last election when Biden beat Trump, it was separated by just 44,000 votes. In 3 states, right? It was Georgia, Arizona, Wisconsin. That was it. It was 44,000 votes. So both of these sides are going, okay, what do we need to do to get those states? What do we need to do to get votes? And both sides should be kissing everyone's ass. Yet, think about what the Democrats are doing, which is crazy. So they're kind of losing a Jewish vote by not showing full support of Israel. They're kind of losing a women vote, as every single House Democrat voted to support men playing in women's sports. They lost the entire crypto crowd since the administration. You look at Gensler and Warren attacking this industry, even the good players. They shut every bank down illegally that does everything with crypto and said we're going to go after any bank that does crypto, right? Illegally, they did this. They're going to get that fixed probably in a couple of years, Operation Choke Point 2.0. So how do you make up the difference? There's only one way. You got to open up the borders and you let 7 million illegal immigrants come in. And when you have Harris and Walz both said this publicly, that they want to give them licenses. And when they have licenses, they're going to be able to vote. It's pretty crazy when I look at that sentiment, because when I saw Biden win, he didn't run on liberal. He kind of partnered with them and said, okay, you felt like, okay, I need these guys on our side. And here's what I'm going to do. But you didn't think they were going to go that far left. And now this party, I mean, even the vice president that you selected, you had the chance to select Pennsylvania. Pennsylvania's a huge freaking state, right? Swing state. And that guy would have, again, Jewish would have been better. And you chose like the liberal, where they're coming out and saying and pounding their chest saying, this is who we are, right? They're not faking it. And people are actually supporting that. And to have that agenda and not even care about some of these groups that you kind of need, it makes me think that they have a very good shot of winning. And I know some people don't want to hear it. I don't want to hear it because I think, I'm capitalism. It's not that I love Donald Trump. I just like a lot of the policies that are currently in place. I feel like being a 50-year-old white businessman, I am a racist. I'm a white supremacist. I am the enemy. Anybody that works hard and works their balls off and tries to support their family, I feel like is like an enemy of this administration. And if this happens in the economic policies, look, you're going to have to adjust your portfolios. This is serious stuff that's going on right now. And if this happens, I don't really think a lot of those policies on the economic side will pass. I'm hoping not. But the fact they're saying them out loud at the convention is a little scary. And I just hope that doesn't happen. We've seen this really left agenda in Canada. And holy shit, it's been a disaster. But that's something that you have to pay attention to. You're going to adjust your portfolios if that happens. Depending on, Senate, the House, everything. This is a pretty big election. You're going to see major changes. And you can look back and say, what is it, for the past 12 years? So what do you got? You have 8 with Obama, 4 with Biden, right? 12, 13, 14. So the last 16 years, Democrats had control of the White House for 12 of those years. And it can't all be Donald Trump's fault, all right? So you could blame that guy as much as you want, but you guys had control pretty much the majority of that time frame. So we'll tell you how to adjust your portfolio, what you need to do, but you need to pay attention to this and vote whatever you want. I know there's Democrats that listen to this. I know there's Republicans, and we want to get into the weeds a little bit here. And I don't care about offending any place. So, everyone has their own thoughts or whatever. But, when it comes to your portfolios, you're going to have to adjust depending on who wins. It really is going to make a significant difference. More this election than I've seen in any other election. I'm not just talking about buying climate change or maybe, oil stocks or not oil stocks based on fracking and stuff like that. There's a lot more at stake here in terms of where the allocation is going to come, higher taxes that they're going. I mean, I've never seen this, right? You've never seen an election where the people that are running on any side are saying, we're raising your taxes. Mm-hmm. Holy shit. Like, you really want to raise my taxes? You're taking my taxes and giving them to places like Ukraine and without any checks or balances and, giving our money away where we have no say in it. That's not what a democracy is, right? You're supposed to represent us. You're not representing us. And now you want to take more money from us, right? It's just, usually you lie about it and say, well, no more new taxes. And you lie about it and you raise taxes. That's usually what every politician does. But, to say, hey, we're raising your taxes. It's definitely a different world and it's pretty crazy, but I didn't want to go that deep into that, but we do. I mean, this is going on right now. They're probably going to get a good day today and tomorrow for the convention. I think it's Thursday, right? Is the final day?
I believe so. The Walz speaks tonight, and then I would guess Kamala speaks tomorrow.
And they're going to get a lot more momentum there. And then let's see what there's going to be debates. There's going to be policies and stuff like that. And then I think people will decide. But it's going to be interesting of what's going on. Especially, it's just going to be up to a few states. That's it. Mm-hmm. Everything else doesn't matter. It's just basically a handful of states, 4 or 5 of them, and those 3 I mentioned earlier. So it should be interesting. But I don't know if I told you, Daniel, but my daughter just got her license today.
Today, nice.
Today.
I knew it was coming up.
A couple
All
of
right.
hours ago. So she
well,
passed.
congratulations.
Yeah, so I said, okay, it was nice knowing you. I'm not going to see her anymore. My wife's not going to know what to do because think about when we were an hour away and they made a really good school because we took them out of public school. We didn't like the public school that they were in. And then that's why we actually built a new house in Jacksonville. But my wife was commuting an hour there, hour back, hour there, hour back, every day, 4 hours a day in a car. Holy shit. And as tough it was on her because she's doing the driving, I had to listen to it every single day when she got home. So it wasn't as good for me as well. And I get it. Now I don't know what she's going to do with herself because I drive my other daughter to school because she's close to where our office is.
Okay.
And I drive her and I come here and I get here, around whatever, 8-ish or whatever, 8:15. But she now she doesn't have to drive. So I'm like, wow, you got a lot of time. So you're going to have to cook and stuff like that. But anyway... the point of this is I went looking for a car with her, and I bought her a car. I bought her a Mercedes. And before you say, Frank, I can't believe you bought your 60-year-old Mercedes. Hear me out. And this is going to be a very good segment, guys, because I'm going to talk about cars. Okay, and I haven't talked about this in a while, but holy shit, is this industry in a lot of trouble. Okay, went to about 7 dealerships. We got a CarMax, and we went with an EV. So it's a Mercedes EQB 250. It has 7,000 miles on it, and it was $37,000. That car brand new was probably, I don't know, I want to say twice that when it first came out. We were looking at comparable cars, Traverse and stuff like that was much higher. And when you get into this, an electric vehicle, she loved it because you see everything light up. We charged it for the first time yesterday. Holy shit.
Complete EV or is it a hybrid?
EV.
Okay.
Not a hybrid.
Okay.
And holy shit, this is the first time. So I said, okay, let's go. Because I didn't get I have to get one installed in my house. I didn't get it yet. I'm going to get it this week. And man, it was a process. Downloading the app, I didn't know you couldn't go to Tesla. I didn't know there's certain chargers, that are good or not. We went to 3 different places. 2 of them were closed, where they only had like 1 or 2 pumps. We used a car, and you could press a button. Anyway, but it was a whole process. Now we know how to do it, but I could see like the learning curve behind it. But once we get the charger in our house, she could charge it, and it's going to be different. But the point is, pricing matters when it comes to EVs. I've been negative on this market for such a long time, saying they're too optimistic, telling you that Ford and GM have no idea what they're doing and never be able to scale. They're not Tesla. Rivian, I thought, did a great job being able to scale, even though the timing was bad. And you're seeing, people pull back and prices coming down. The used car market is crashing, absolutely crashing right now. To get an EV, if you're ever thinking about trying an EV, do it now because you can get Teslas for half the price that have like 5,000 miles on them. It's the only reason why I did that. I didn't want to get her a Mercedes, but when it's cheaper than a lot of the GMs, the Fords, and everything else that we were looking at, I was like, wow, and it's used. And plus, we'll get a tax credit for it. So, but the point is, when we went to 7 different dealerships, the amount of inventory, Daniel, that I saw on the books, not on the books, but just at the lots, holy shit, I've never seen so many cars in my life. There was one where there was hundreds, if not 1,000 cars. That's how big this lot was. And they had a big garage with 4 different floors that we drove in, and it was all full with cars. My wife is in the market for a car. Her's 2.5 years old, so she wants to trade it in, get something more updated. And she is going through the midlife crisis like we all do, and she wanted a Dodge Charger. So we tested something. I didn't know they stopped making them in 2023. They're coming out with the electric one, which is probably not going to be available for another 3 years. They must have had like 70, 80 of these cars, all different colors. They wanted to give it to us. They wanted to give it to us. And then when she test drove, she's like, I'm not ready for it. I don't want it. Maybe without any kids or whatever. But, it was just funny. It's like your dream car when you were younger. But I got to the inventory levels just made me think. And I was like, holy shit, these guys have so many cars. They weren't busy. I asked every single dealership how was business. And everyone said the last 2 months have been really, really bad. So I just started doing research. And, man, it's pretty scary. I think Ford and GM are both going to crash from here. Crash. I think they have that 30% plus downside from here. That's how much I think. It's that bad with the industry. So I don't know if you've been looking at cars. I know that you're going to see massive incentives, but Ford came out today.
I was going to say, they're already in the news just today about lowering.
What's the news that you saw?
They're scaling back even further on EVs.
Okay, that's
and
the
switching
headline.
to hybrids. Ford, I believe it was Ford.
Yeah.
They're going to focus more on hybrids, which actually, that makes a lot of sense. But
yeah.
Anyway, they're cutting back even more so. This is probably their 5th or 6th announcement to cut back on EVs.
Everyone's going to see that article, and that's what. Read the whole article. Okay, because first they dropped plans for the EV truck, right? That their plant in Tennessee. So they said they're going to further delay it, which means they're probably not going to do it. They also took a $400 million charge. Okay, this should be the headline story. The $400 million charge should be the headline story on basically manufacturing and their plant. And if you look at Ford, I think, is second in the U.S., maybe, at 7.4%, third in the U.S. Hyundai is 10%, Tesla's 50%. But I started digging in, and GM might not get smoked as much because we know they have a $6 billion buyback in place, amounts to 10% of the float, which should, help a little bit. But GM just announced layoffs. They announced layoffs in December. They just announced layoffs a couple of days ago. If you look at Ford's last quarter, it was atrocious. And again, they said they're canceling their electric three-row seat for the SUV, delaying the plan again, the whole write-down. But when I started doing the research on the inventory, it just scared the crap out of you. So when you look at the inventory of new vehicles, okay, they've been below 3 million for the past 4 years. Total inventory of U.S. cars and trucks, right? They've been under 3 million for the past 4 years. So between 2.5 and 2.9, they're at 3.16 now, and they're likely going a lot higher. That's very, very high. Remember, these are 2024s in the lots, and 2025s are just beginning to come out. So they haven't got rid of the 2024s yet. 2025s are just starting to get out. You get 2025s some places, they usually come out now through October. If you look at supply in terms of days, pay attention to this, please, because this is like the same store sales metric for retailers. That's how important it is. So when you look at supply inventory in terms of days, the average supply inventory in cars in terms of days, historically is 60 days. Ram, Jeep, Dodge, all over 150 days. Lincoln, 145 days. How are they going to get rid of this stuff? Nissan, Chrysler, Volvo, Infiniti, Mazda, all over 100. Some of them up to 120. Ford is at 100, but its signature, what's their signature product? Ford is
F-150.
F-150 is at 135 days. That's how much inventory they have of that truck.
I need to trade mine
135
in.
days. So if you're going to go to Ford, whatever price they give you, say I want to pay $10,000 less than $5,000 just so I'm walking out, and they will let you walk out, but they'll probably call you back. They're going to call you back because it's going to be that bad. The Escape, if you look at Escape, the Bronco Sport, over 150 days. The Edge, which is supposed to be a good car, Ford Edge, right, small car, over 180 days.
Wow.
Okay, the average is 60. That's how much inventory, and you have the 2025 is about to come in a lot. You know what Toyota's at? The average is 60. This is cool. Toyota's at 31. Why do you think?
Because they didn't go down the EV
They didn't go
trail.
down the EV trail. And I remember, I think it was 2017
Didn't
or
they
18.
run their CEO off too?
I don't know.
But he was spot on.
Isn't his name Toyota with DA, I think, whatever. But I'm not even going to go to him. I don't know. Maybe he started the company, his family started the company. I have no idea. But I remember going to CES and he was speaking at Keynote, and he was saying that EVs are not going to take off. They're not going to be as big as everybody believes. He's like, we're not going all in on them. And everybody ripped them apart, especially the climate change crazies. They went after Toyota and said, you guys are assholes. They said it's never going to get to 30% market share no matter the technology or the cost reduction. I don't know about that. But still, think about that for a minute. If you can capture 25% of a market like that, it's massive. It's game-changing, right? So it's not like we're shitting on EVs here. We just knew what people like. It's going to be 40%. We're going to mandate every car. So in other words, when you had Ford and GM, who did everything they can to put Tesla out of business, lobbying politicians and make sure they can't get any dealerships or anything. Then late, they decided to go all in on EVs and spend, tens of billions, if almost hundreds of billions of dollars. And this is over the past 5 years. Toyota stuck to what they're great at. They manage inventory to perfection. And now they're selling tons of gas vehicles. They're selling hybrids. And also, while Ford and GM were trying to make EVs and scale them, which never happened, what happened? They forgot about their core business, the gas vehicles. And this resulted in them producing a lot of shitty cars. They didn't have, whatever analogy you want to use, pulse, finger on the whatever. I don't know what happened, but if you look at the massive recalls that you're seeing, and GM, I think, just came out now and they got fined or something, and BMW just came out with a massive, massive recall today, a ton of all the cars. But the warranty charges have crushed these companies, especially when you look at Ford, which resulted in $1 billion hit to profits. That's a 10% hit in their profits. Big. I mean, you look at gross margins of 15%, $1 billion, right? I think Ford and GM are in really, really big trouble. I think this is a story nobody's telling. We saw it happen with travel out of nowhere. People, like the airlines, all of them came out of nowhere and said, hey, you know, we're not seeing the demand as crazy now. The hotels, all of them came out and warned, said the RevPAR is down lower than expected. We're seeing prices come down in a lot of different industries. Used car prices come down. I don't think this is pricing the Ford GM. I think they're going to be in a lot of trouble. They have a lot of moving parts and different things in finance divisions, and they're great at manipulating earnings, which a lot of companies do and legally. I think these guys have 30% downside here. I think they're in a lot of trouble. They're sitting on massive inventory. You're going to see demand freeze up. The car prices are way, 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 way too high. So the margins are going to get absolutely crushed. Not only that, they produce these cars already, right? So they paid higher prices just to produce them. You're going to have to sell them at steep discounts to get this inventory off. This is a story I feel like it's not being told, but Ford, GM, a lot of these automakers are in trouble. I think Toyota is really going to kick ass here. But when you look at the inventory, I didn't know it was that bad until I started going to these places. Let me know what you guys see. FrankCurzioResearch.com, but used cars down 11% prices year over year. EV prices are down 16%. If you're thinking about an EV, get a used Tesla. They're giving them away if you want to try EV. It made me try an EV. I'll let you know how it is. So far, it's so good. My daughter, she loves the car. Again, we charged it for the first time, which is a real pain in the ass because it took us it charged pretty quick. It was like 20 minutes to get to 80%, but it was to learn how to do it and we never did it before. It was, we were there for like a half an hour and people were like, are you using that thing or not? And they were like yelling at us. I was just like, I didn't mean to yell, get the fuck out of here to the guy in front of my daughter, but sometimes you got to get a little loud when people get loud with you. Whatever happens,
you can't do nothing uneventful, can't do anything.
I'm sitting there, I'm trying to do it.
Can't take you anywhere, man.
Like nobody accounts for anything like the learning curve, right? My daughter just got a license. Yeah. Like, we're charging it. They're like, and two guys came by. One guy's like, are you gonna? I was like, hey, just fuck off. Just fuck off. Come on, you just wait. There's 20 spaces here. You can get it done someplace else. Somebody's gonna finish in 20 minutes, right? Just charging a car. But anyway, I'm probably gonna get lots of comments about that. But seriously, in the stock, this is where you listen to it in stocks and stuff like that. I usually say this at a premium, but be careful with Ford and GM if you own those stocks. I'd sell them right away. I think you're gonna be in a lot of trouble with those names. No one's going to come by and acquire them. GM might be a little bit safer. Again, that's a big buyback. That's a big buyback, 10% of the flow, which should help them. But let's see how much they bought back already because they are laying off employees and you're seeing a slowdown. Write-downs. Again, that headline should have been $400 million write-down, and it wasn't even in the headline. It was like, they're slowing the EV and they're delaying it. No, that should have been the headline, and it wasn't. On another note, there's a company that you know very well, CarMax. And that's where we got this car from. And I think they're going to kill it. I mean, CarMax was jam-packed. The prices were there. Depending on where they're buying the prices, they're going to be, they're not manufacturing. They don't have to deal with all the manufacturing costs. They're just getting cars on these lots. They probably have all the algorithms in place using AI to get the perfect prices on these cars, and then they're going to make their fees no matter what. But the used car, like CarMax, even Carvana's on fire. Holy shit, the Carvana comeback. That almost went out of business. But these are really good names in that space. I know you like CarMax. Talk about it for a while.
Yeah, I've seen some hedge funds go in and out of it. It's come on some few screens that I've run. That's what got my attention. Quickly, I'll go over tomorrow in more detail on Wall Street Unplugged Premium. See what I did there, Frank. But the one thing that stuck out to me from its previous earnings on CarMax was that they highlighted, the management is has a fantastic mindset because they focus on their core business and they want to do that 0 to 4-year-old kind of car, that age group. They want to maintain margins. They did take a hit to margins because of, like you said, prices and things, but they're not just going to discount prices to move inventory like some of their competitors. The thing that stuck out to me was the CEO talked about how the number of cars that were 10 years or older have really taken off lately. And obviously that's a trend with a struggling consumer with higher prices, higher interest rates, higher borrowing costs, et cetera. What that means is outside of CarMax, like you like to say, hey, if you read the Wall Street Journal, think through the Wall Street Journal and what other stocks are impacted. I know I've said this a lot, and if you're tired of me saying this, email me, Daniel@CurzioResearch.com. But when you have headlines or at least bullet points talking about 10 years and older cars, when people are holding onto their cars longer, that is great for AutoZone and O'Reilly Auto Parts. And those guys are some of the most fantastic businesses. Shouldn't surprise anybody, and I sold it too early in our Dollar Stock Club with AutoZone. But those stocks are both right at 52-week highs, maybe even all-time highs, but definitely 52-week highs. And the longer you hold on to your car, the better for those guys. But CarMax is a fantastic business for what Frank was just talking about. Plus, They have the CarMax financing, the financing division, obviously. And this is what's cool. You would rather trade growth in your core business versus having higher interest rates and just taking some more money off the top, because at some point, high interest rates are going to cause a slowdown in overall consumption, which is happening. But you have the car dealership, and then you have the financing side to really where you can take advantage of higher interest rates. Those guys are just solid. So yeah, the stock not doing a whole lot. It's kind of been going sideways, but definitely I've been watching that for a while. But it's hard for me not to think the real takeaway is AutoZone and O'Reilly right here with the higher.
Yeah,
those are just amazing companies.
I mean, I'm looking at
and speaking of
CarMax.
buybacks, I mean, AutoZone basically wrote the book on that.
CarMax is flat for the year. For 12 months, it's flat. You're looking at Carvana's up 300%, but Carvana, I want to look at. Carvana was great. They were so close to going under. That stock was, I mean, even a year ago. Let's go further back. I mean, this is like, we're going at 2023. I mean, I remember coming down to like $3. It's like $7 or $8 here. It's 158. Right. So you know, with CarMax, again, you're seeing car sales where maybe you might say, well, people don't spend. People are going to need cars. They're going to need cars constantly. But, you know, I don't think they're going to go new because they're so expensive right now. And now CarMax it's like no haggle. You go there, that's the price. That's it. It's pretty simple. The process was very, very easy for us. But let's see. I think you're right with the auto parts. That probably benefit even more. But be careful with the auto industry, because the new companies, everybody that we saw, like everybody, it's just they were all empty. CarMax was pretty packed. People were definitely getting cars there. It's going to be interesting to see how they get rid of this inventory. How do you get rid of inventory? Look at Target. Look at all these companies who have massive inventory. And by the way, TJ Maxx also reported great numbers. That's up 6%. Another good company. But, you know, it's how do you get rid of inventory is you have to lower prices. And sometimes you have to take write down or whatever. You have to lower prices. They're not there yet. They're not there. You know, GM and Ford aren't there. A lot of these car makers, they're sitting with massive amounts of inventory. I don't know how they're going to get it off the books. They're going to have to lower prices tremendously. And the fact that you can get, man, electric vehicles or you know, used cars, again, prices down tremendously, 11%, you know, you're going to see more people. I mean, if you can get a car with 3,000, 5,000, 10,000 miles, I mean, you're saving it, right? I mean, how much does it go down when you drive it out? What do they say? You drive it like
anywhere from
12% of something in
10 to 30, really. I mean, they can be astronomical depending on the vehicle.
As soon as you drive it out there, but and then if it's a new car, if it's 2023, you have the warranty still on it for a couple of years, usually 3 years. So that's an industry. Again, I just went through it like craziness over the past month, which has been a nightmare for me. It's nice when I'm buying a car for myself, but I got to buy a car for everybody else now. But yeah, be careful of those companies. It could be dangerous. So yeah, covered a lot.
All right,
a lot today. And welcome back, Daniel.
Good to be
on the
back.
podcast tomorrow, the premium podcast, where that's where we, you know, really dig into a lot of stocks today. I just wanted to show you some analysis because I just did a lot on it in the past couple of days because I'm like, holy shit, man, how much inventory is on the books? But I want to hear from you. Let me know if you went shopping. Let me know what you're seeing. Let me know if I know there's so many people listen to this podcast now. Thank you so much. And I'm humbled, but we have people at dealerships, and you might be a dealership where, you know, you might be doing great right now. Toyota, there's other companies that are doing well, but there's some that are in a lot of trouble right now. Business is definitely in a downturn from everyone that I spoke to that works at a dealership. So it might just be limited to those, but I like to hear that's the benefit of this podcast, guys. This is a community. This is massive. This is a network. You know, there's no ego here. You know, if 50 people in a row email me and say, no, you know, we're seeing demand and we all work at dealerships, I'm going to come out and say, hey, this is what I heard, right? We want to get it right. And this way we could, you know, get ahead of the curve, because all data that's reported, just like you saw today with the jobs number, it's all lagging. It's data that's changed a lot. And when you get real time from people on the ground, boots on the ground, that's where you get the information first. That's how you make the most money in stocks. How I made a living doing this is because having a great network and getting into ideas and stuff like that before anyone else. No one's talking about this downturn in the car industry right now. Nobody. And I think these stocks are going to get absolutely hammered coming up. Let's see if I'm right. And let's see if we can make money from that. But other than that, Daniel, final parting thoughts?
Good to be back. Be careful on GM and Ford.
Yeah. All right, guys.
See you tomorrow.
Yeah. Questions, comments, FrankCurzioResearch.com. Daniel, real quick.
Daniel at CurzioResearch.com.
All right, guys. We'll see you tomorrow on Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.